Do you need to improve your credit? Are you curious how your credit score is calculated? Well, in today's video, we're going to cover all of that so you can get that perfect score. I'm Bart Mazur, and for over 10 years, I've been working with young families, helping them overcome their biggest financial challenges by giving them the tools and resources they need to crush it financially. So the range of a credit score goes between 300 and 850. 700 is pretty good, 800 is considered excellent, that magical unicorn number, and most people reside between that 600 and 750 range. So the chart's gonna break it down for you, but your goal should be to hit that perfect 800 score. So why is credit important? Credit scores help banks and other institutions determine your credit risk, or how much of a risk you are for lending or insurance or those types of things. Though the credit score isn't the perfect way of determining that risk, it is one of the main things that they have to go off of in order to determine your credit worthiness. So having a good credit score will help you get a couple things. It'll help you get a loan, it'll help you get an apartment. It can also help lower your insurance rates, believe it or not. So how is your credit score determined? Well, your credit score is broken down in 5 different areas. So 35% of your score is your payment history. So here they're looking for delinquent payments, they're looking for late payments, and this is probably the easiest area to shore up and fix, and it's also the largest area, so it's the most important. So make sure you're paying on time, and that'll help improve your score. 30% of your score is the amount owed. So here they're looking to determine if you're overextended. And what I mean by that is it's the amount of credit that you have available versus how much you're actually using. For example, if you have $300 on a $500 credit limit, that's a 60% utilization. However, if that same $300 was on a $3,000 credit limit, that's only a 10% utilization. And that is a lot more favorable for the credit score. Quick tip, so make sure you're paying down your balances every month and you're using less than 30% of your total credit, and that'll help boost your score. And what you can also do is increase your limits and not use as much, and that'll also help boost your score because it gives you more of a buffer. Now the next one, 15% of your score, is the length of your credit history. So in general, having credit for a longer period of time is a lot more positive for your score. So here you want to make sure that you're keeping older accounts a lot longer and you're not closing them out if they're not even being used. This way it gives you that history that you need in order to boost that score. So the next one is 0% of your score is smashing that like button for the YouTube algorithm and also subscribing to the channel. All right, thanks for doing that, appreciate it. All right, so the fourth area is having a good credit mix, and this makes up 10% of your score. So here what they're looking for is not just having maybe one credit card, but maybe having a credit card, a student loan, possibly a mortgage or any other installment loans, retail cards. Those types of things all added together really help boost your score. Now, I'm not saying run out and get a whole bunch of different things if you don't have them, but it is good to have a good mix of the different types of credit, and then that way they can see that you're utilizing credit properly and responsibly, and that gives you a better base for building that score up. And number 5, 10% of your score is new credit. So this is looked at how many new accounts you're opening in a short period of time. Also, how many inquiries you're having in your credit during a short period of time. Now, for an example, if you're looking at a mortgage and you're going around shopping at, say, 4 or 5 different mortgage companies to find a good rate, and it's within like a week or 2 weeks of each other, they're not gonna ding you as hard as if you went and tried to get a mortgage and then in the same week you got a credit card and then you're applying for furniture, financing over there, and then maybe a car loan and other retail cards. So all those things combined in a short period of time, they're gonna look at that as a negative. However, if you're just shopping for a mortgage, you should be okay. So what you want to do is you want to spread out the different types of credit that you're trying to get over a longer period of time, and that'll help you to boost your score. Now up above is a link to another video I did on boosting your credit score, and it gives you more of the tactics and techniques to boosting the score as opposed to just understanding why the score is the way it is, like today's video.